Hi everyone, welcome to our class online for Tuesday night, September 15th. So we're just going to do an online study. It won't be very long. We're going to run through a PowerPoint and some notes. We are now into chapter 3, so that is good. We're moving onward and upward. I hope you all had a terrific weekend, and I hope you find our short class online eventful and intuitive, and then I will see you Thursday night, okay? I haven't heard from many people, so if anybody has any questions about homework, the test, hopefully you got through it fine, but if not, let me know if you have any questions, email or text me. Okay, so let's go through our PowerPoint first. Let's start with that. So we're moving on to chapter 3. We're doing journal entries, and we're doing T accounts that we've talked about in class a little bit. So you can see the first slide here. Let's move on to our second slide. These are our learning objectives. After studying this chapter, you will be able to distinguish between debits and credits, work with T accounts, journalize a transaction, post a transaction, use a special journal, and a subsidiary ledger. Okay, so we have some important stuff in this chapter. Number 1 is distinguishing between debits and credits. So if you remember the cheat sheet I gave you, on the back of our accounting equation that showed our assets, liabilities, owner's equity, on the back of that paper we have increase and decrease. We have different rules for debits and credits, which we're really going to jump into in chapter 3. Okay, so our next slide, using debits and credits. Here is an impact of debits and credits on account types. I like this chart. I like that it's in purple. It seems to pop out. You can tell we have our different account types. We have assets, liability, capital, withdrawal, revenue, and expense. So with these different account types, they have different rules. So with an asset, if you are to debit an asset, that means you're increasing your asset. If you credit your asset, that means you're decreasing it. So the rule flip-flops for liability, capital, and revenue. The rule stays the same for assets, withdrawal, and expense. Okay, this is not something that you'll just easily memorize, but when you have your little notes on it, and I will give you a handout of this PowerPoint when I see you Thursday night, you can reflect on this as well, and you have a nice little cheat sheet, and this will really help you through the course. Okay, so there is one little warning here at the bottom of the PowerPoint. It says the total debits and total credits within each entry must be equal. We already know that when it comes to our accounting equation, so that should make sense to all of you, I believe. All right, next slide, using T accounts. So remember I told you that a T account is a type of tool in accounting that we use. The example on the PowerPoint is a cash. That's our cash account right there. We show debits on the left, credits on the right. We have different transaction dollar amounts as you see, and then we have our ending balance down at the bottom. Now you might be wondering, well, how is there an ending balance if we have to equal out? Well, this is only one account, so this is not considering two accounts are affected here. This is just focusing on one account. What's going in, what's going out. There's our total debits, our total credits, and what's the difference? That's our ending balance in the bank account, okay? The note at the bottom, since the total debits exceed the total credits, the balance for this cash account is placed on the debit side. Okay? Let's move on. Using T accounts. So analyzing a T account, step 1, determine which accounts have been impacted. Step 2, determine by how much each account has increased or decreased. Step 3, determine if these accounts must be debited or credited based on whether each is an asset, a liability, a capital, a withdrawal, a revenue, or an expense account. So now we have stretched it out a little bit further than our accounting equation with just an asset, liability, and owner's equity. Now, to get our rule down with debits and credits, we need to know what we're dealing with. Is our account asset? Is it a liability? Is it a capital? Is it a withdrawal? Is it a revenue, or is it an expense account? So the balance column format, when you look at this picture, you see that we're still dealing with cash. We see the date, we see an explanation, we see our debit on the left, credit on our right, and we see our balance. So this is something similar that you will see in QuickBooks when we get there. The balance column format conveys the same information as a T account, but in a more streamlined manner, similar to a journal entry. Okay. Using general and special journals. General journals contain entries that do not fit within a special journal. Special journals display all transactions of a specific type. They provide efficient method for reviewing business activity, and companies can tailor to their own special needs. Using general and special journals continued. Journal types and activities. We have cash receipts. These are entries in which cash is received. We have cash payments, entries in which cash is paid out. We have revenue, entries in which revenue is earned on account, so this is accounts receivable. We have purchases. This is entries in which purchases are made on account, which is accounts payable. So using general and subsidiary ledgers. These are ledgers in which T accounts are contained. We have general ledger. These are control accounts. We have accounts receivable, subsidiary ledger, and we have accounts payable, subsidiary ledger. That's it for our PowerPoint. So hold on just a second, and I want to show you something else. Okay, everyone, I'm back. You didn't notice, but I took a minute to change my screen. So what I did here was pull up Excel, and as you can see on my screen, I have a T account with a cash account at the top. I have some different transactions, and I have some dollar amounts. So if you turn in your chapter 3 to page 77, this is calculate ending balances. So this is KCA 3-2. So this is the very first problem, and I'm going to walk you through it. That way you can do the others so that you're ready to discuss this when I see you on Thursday. So first things first, we have to add up both sides of our debits and then our credits. So they give us a dollar amount. I like to use Excel. You can use Excel or use a sheet of paper, whatever works for you. I have my $25,400. I have my $3,250 and my $4,500. They add up to $33,150. Now I add up the right side. I have credits at $3,100, $1,550, $4,120, and $800. This totals $9,570. So the question is this: calculate the ending balance for each T account. So I have $33,150, and I am just simply taking away the $9,570, and there's my ending balance, $23,580. That's it. That's the answer to the question. Do the same for questions 2, 3, and 4. And above this knowledge check is in knowledge check A is KCA 3-1. Now I want you to do those. It also says determine the normal balance, which is 1 through 10. So it lets you know, indicate whether the normal balance for each account is a debit or the credit of the T account. Remember that the normal balance side of the T account is the side on which the account increases. So make sure you use your little cheat sheet, or in the book. There's actually a page in the book where it also tells you again that which side decreases and increases with the rule when it comes to debits and credits. So it's right on page 57, so reference that if you need to, if you forgot your cheat sheet here in class. Our positive side, which increases, is our normal side. So for KCA 3-2, I have my ending balance, and this is a cash account. My cash account normal side is the side that increases. It's the debit side. So that's why I put my ending dollar amount there, $23,580. Okay? So if you will go through today, do knowledge check 3-1, 3-2 on page 77. I want you to also do page 78, KCA 3-3. That one might be a tiny bit more difficult. I'm not looking for you to do them all. If you could just do the first 3 to get a feeling for it, there's examples, the case in points that are in the chapter, and then we will do the rest of them together in class. I'd just like to see you get a start on it and see where you get. I will open up eLab, and I'd like for you to submit 3-1, 3-2 from page 77, and that's it. Okay? Do a couple on page 78, but do not put them in eLab. It won't be there as an assignment. Also, your reading will be page 51 through 62. You can stop at 62, okay? And then we will do a review when I see you Thursday night, and we will jump into general and special journals, along with more assignments on T accounts and talking about our double entry bookkeeping when it comes to debits and credits. Hope you all have a great night, and I will see you Thursday night, okay? Take care. Let me know if you need anything. Bye-bye.